You can start.
Okay. A very good evening. This is Geeta Mallikarjunan, COO of HMA, and on behalf of Hyderabad Management Association, I welcome you to the lecture meeting on the topic Enterprise Performance Management by Professor S. Satish Kumar, Senior Faculty at Institute of Public Enterprise, Hyderabad. I welcome our MC members, past presidents, HMA members, and others who are present on this platform and also viewing us live on Facebook. I take this opportunity to welcome our convener, MSME, Mr. Rajendra Krishna Prasad Peddi, our speaker for the day, Professor S. Satish Kumar. And with this, I hand the floor to our president, Mr. Ramchandra, to take the meeting forward.
Thank you very much, Geeta ji. We have another interesting session today. A very good evening and a warm welcome to all the esteemed audience present over. Past president, if they are not able to see them on the screen. Office bearers, Suman Rao Jayant Garu, and Rajendra Prasad Peddi, who is our convener for today's program. And then our other co-op members, Renuka ji, and other valuable members, and my CEO, Geeta ji. And all the esteemed members who are members of HMA and also our guests of HMA. Maybe at this very starting point, I'll just say, because I'm prompted by Mr. Sumit Gupta, that I was requesting him, why not you join? So rest of gentlemen who are not members of HMA, I think it's an opportunity to ask them to join, because it will be quite a valuable type of experience that you'll have with HMA. Very frankly, sir, I'm really pleased to invite our guest of honor today, Satish Kumar Garu, who's an IP. In fact, I'm an alumnus of the college. And I'm very happy to hear you, sir. I welcome you for today's meeting, and I'm sure we'll have great learnings at the end of the day. Sir, I also welcome some of our senior members who are present, and I thank them for joining for today's program. So basically, you are kindly aware that we at HMA try to keep doing such type of programs to enrich the young management students, young practicing managers, and also the other allied who probably always take learning as a continuous process. And the process, basically, we do this exercise almost every week, one or two programs we keep doing in different forums, whether it is for the students or for the faculty or for the managers, and even entrepreneurs in the SME sector, where we also have an SME sector, also SME desk also, where we try to get in touch with these gentlemen who probably require some handholding. These sort of lectures are normally given by eminent personalities who have real rich knowledge. And by listening to them, we get the practical insights. And many a time I keep telling that the textbook don't tell all this. See, there is a lot of touch where special touch is there when a practicing manager or an expert talks with all these sort of things together, along with the academic literature, what is available on books. So always I feel, sir, listening to such lectures always gives so much of value, add value, and always a learning experience. I really feel I would rather request all the audience to please keep coming to our programs and probably get yourself enriched in some form or other. Today's program, as you are kindly aware, we are having Mr. Satish Kumar Garu, who talks about performance management, which I think is a very, a word probably every organization would love to see that. Basically, every organization thrives to see that they do the best. And in simple words, to say management is nothing but doing right thing at the right time. But, there is so much of involvement in that. And today, this word coined as performance-related management, sometimes somebody calls it business management, or then somebody calls enterprise management. But whatever it is, it only says that how best you can use the resources and how best you can, align yourself with the organization goals, and then see how best you can get the profitability or whatever it is by using the optimum resources and see that how effective you are. I'm sure I will not take much time on this front. We'll definitely listen to Satish Kumar and get enlightened. And I'm sure at the end of the day, we'll be quite happy about what we have had today. With these few words, I would request Mr. Peddi Garu to please talk the profile of Satish Garu to the August audience. And after that, may I request the August audience to please post your questions in the question box. Talking would probably disrupt the continuity in his talk. And keep all your phones, your speakers on mute mode, so that there's not much of disturbance. So with these words, I now hand over to Mr. Rajendra Krishna Prasad Garu to please talk about our honored guests. Thank you very much, and thanks for the opportunity. And thank you, sir. Welcome to all of you. Namaste.
Thank you. Thank you, sir. Thank you very much, sir. Sir, respected HMA President Ramchandra Garu and our respected Vice President Jayant Naidu Garu, our HMA CEO Geetaji Garu, our fellow MC members, guest speakers of today evening, Professor Satish Kumar Garu, and esteemed HMA members, and good evening and a warm welcome to you all for today's evening webinar on Enterprise Performance Management by Professor Satish Kumar ji. It's indeed my pleasure and honor as a convener of HMA MSME committee to introduce our guest speaker to you all. Mr. Satish Kumar Garu is a senior faculty at the Institute of Public Enterprise, IPE, Hyderabad, since the last 13 years, and is currently a professor in the area of operation management and quantitative methods, an honors graduate in electrical and electronics engineer from College of Kindi, Chennai. He also holds a postgraduate diploma in management from the Indian Institute of Management, Bangalore. After 30 months stint at Hindustan Aeronautics.
Oh, no. So you're gone on mute, Prasad. And so that you're on mute. Yeah.
Mr. Kumar Garu ventured on his own and was successful entrepreneur for 28 years, having handled positions in the various function areas in the companies that he has part of. Mr. Kumar Garu has wide experience in all areas of management, including strategy, operation, business development, treasury, finance, etc. Recipient of Tarapur Gold Medal for proficiency in engineering from College of Engineering, Guindy, Madras. Mr. Kumar Garu has participated in many national and international conferences and presented the papers on productivity improvement, standards and testing of packaging material, emerging technologies in corrugated box packing industry. At IPE, he teaches courses on quantitative methods, operation research, supply chain management, B2B marketing, and project management for MBA students. He has also conducted many management development programs for practicing managers in project management, operation excellence, supply chain analytical, enterprise risk management, etc. And is currently the coordinator of training consultancy division at IPE. Mr. Satish Kumar Garu has undertaken many consulting assignments in performance audit, R&D policy, formulation, PMS, impact assessment studies, designing a corporate plan, etc. for various state of central public social enterprises. Well, this is a brief about our guest speaker today, Professor Satish Kumar Garu. Now I request Professor Satish Kumar Garu to give his presentation. Before that, I have a small request, as our president said to all participants, please keep your questions in the chat box. I'll be taking up in Q&A session after the speaker's talk. Thank you. Now, Satish Kumar Garu, please.
So before Satish Kumar Garu gets in, I just welcome our honored guest, Gopal Krishna Garu. He is retired and former very senior bureaucrat, and incidentally, he was also the director of IP earlier.
Oh,
so welcome to you, Gopal Krishna Garu. Namaste, sir.
Namaste, sir.
Yes, sir. Please, Satish Garu.
Namaskaram, Gopal Krishna.
Namaskaram.
I'm right now a faculty at IP, and hence
very nice.
Give my pronouns to you before I start the session. I seek your blessings for the session to go well. Very good evening to all of you, Mr. Ramchandra, head of president of HMA, Mr. Prasad, Mrs. Geeta, all the office bearers and managing committee members of HMA. It's really an honor for me to be invited for delivering a session on enterprise performance management for HMA members and other interested people. Let me at the outset thank Mr. Prasad for giving me this opportunity, and also for the introduction that he gave about me. Now let me get on with what I want to do. I've been told that I have 45 minutes time to talk. And as you can well understand, in 45 minutes, what we can do is we can probably exchange a few thoughts and have a brief idea of what the topic is all about. And that's what I'm doing during the next 45 minutes or so. What I'm going to be doing is I'll be sharing a screen where the PowerPoint presentation will be there. I'm not going to be reading the PowerPoint presentation. That only gives you an idea about what exactly I'm going to be talking about. And the presentation also will be shared with the participants after the program so that they can have a look at it if they wish to later. And my coordinates will be available with Mr. Prasad. If any of you would like to talk to me subsequently on any point that we have discussed here, I would absolutely welcome, and it will be my pleasure to engage with you on that. So let me just share the screen, and I hope it's visible now.
Yes.
Yes.
So we are going to be talking about enterprise performance management, right? So this is the I'm going to be the path for my presentation for this evening will be going through these points briefly for the total time being 45 minutes. First, we are going to discuss about the need. What is the need for performance management at all in any organization? Followed by we'll have a brief introduction about EPM and how it has evolved over a period of time and where it is today. Then we'll brief look at the framework, the processes, what exactly the process, how exactly performance management EPM is done. And then we'll be looking at the benefits that will accrue if one were to use this exercise or performance management exercise. For that, we are going to be also discussing about the metrics which are essential, which are going to be basically looked at while doing the performance management, and also discuss about some best practices, what way one can get the best out of, how one can get the best out of this practice. We'll have a look at that. And also briefly, we'll talk about what are the various analytical tools that are used. But for want of time and for the objective of this exercise is entirely going to be, as I mentioned to you, introductory in nature. At the end of this program, probably you'll be in a position to say what enterprise performance management is all about.
Sir, excuse me. Can you make it a full screen, sir? Is it possible? Yeah, fine.
Yeah. So that's what we will be doing over the next 45 minutes or so. Let's first look at the need. Why performance management? Mr. Ramchandra was mentioning about it's an interesting topic, and it's very true. Why performance management is absolutely essential. Monitoring of the performance and management is absolutely essential if we are to succeed in business. So why do enterprises fail? If one were to look at that, one would see that at some point of time or the other, there has been either very little monitoring or no monitoring at all about the progress. Hence, problems get magnified, get amplified, get increased in size, and by the time one awakens to gets to know about the problems, it's probably a little too late to correct immediately. So, majority of the failures of enterprises could be traced to not understanding where an organization is, how an organization is performing. So understanding performance management and practicing it is absolutely essential for success. If you look at the other reasons one were to see, if you look at EPM as a software tool, if one were to see, it is about integrating. We can do the performance management for an enterprise which has different business units. Multiple units performances can be consolidated, brought into one forum, and then the entire enterprise can look at it as a whole. That's objective. But the same logic could probably be taken forward to even an individual organization which has many departments from whose performances have to be individually taken and then put together, and the organization's performance has to be assessed. One of the biggest problems is that each of the departments or each of the business units, in case of the multiple units, always most of the decision makings are done in silos. They are all doing it with their own local optimization, we call it. You talk about what is good for you. You really do not look at what is required for the organization as a whole or for the enterprise as a whole. So thinking and decision-making process in silos is one of the reasons why enterprises fail. And so again, that leads to your need for this integrated way of thinking, which EPM is going to be doing. And if one were to look at when Prasad told me that he's in charge of the MSMEs and the startup industries, I thought, why not we talk about the startups and technocrat entrepreneurs? I was a technocrat entrepreneur myself, but I was lucky to have done a course in management prior to that. So I had some idea about the financials, accounts, and other facets of business. Whereas typically a technocrat entrepreneur is a technical guy who knows the product, who knows how to make a good product, but he's invariably not fully versed with managing a business as such. And managing and controlling a business requires other skills other than technical skills. And the startups also, if you see, basically today's startups mostly, which are all tech-based, people are so busy in the technical requirement wherein they are developing a product or a service which require their complete attention, they tend to overlook this, how they are progressing further. Because everybody has got funding is there, and funding has to be justified. The fundings have to come in continuously. Performance has to be necessarily shown on some time frame basis. Hence, managing performance is still more difficult for startups and technocrat entrepreneurs, because they are more tied up in their development of the product, or getting their businesses established and looking at the more of the technical aspect. That's the main problem with the technical entrepreneurs. And hence, I believe that they have to, this has to go into their mind that right from day one, they have to look at ways and means of, how they can be looking at, monitor their organization's performance and how they can improve them. So this requires monitoring of all facets of business, as I mentioned just before. It's not just to any individual department doing well is not sufficient. We have to ensure that all aspects of business have to be looked at in an integrated fashion. That's where EPM comes into being. The concept of EPM itself is of integrating nature, looking at various aspects, bringing them together, and then consolidating, and then looking at that, and then taking a decision which is going to be resulting in a global optima rather than a local optima, rather than looking at individual places. For the entire organization, benefits are going to be decided. So these are the reasons why enterprise performance management is essential. So if we were to look at what exactly is, I'm not going to be reading this, but as you can see, this first thing is a measurement. If the enterprise performance measurement is a system that measures the effectiveness of all our efforts, what we are doing. How are we going to get the measurements? Measure the performance through performance metrics. So we have to define metrics. Metrics are measurable parameters which will talk about the performance. So if you are able to define metrics in the various functional areas, various operations, marketing, finance, people management, in all the aspects, we have some set goals. And then if we measure them, how we are performing over a period of time, we'll be in a position to see how we are progressing. Hence, EPM is a system that measures the effectiveness of our efforts and routine work through performance metrics. That's what it is. And it also includes development, implementation, monitoring, as you can see, whatever is written there. Now, if you look at the process of EPM, it's what we are doing here is monitoring the performance across the enterprise, the entire enterprise. If you're talking about, as I mentioned to you, enterprise of many business units, each of the business unit may be doing its performance by itself, but looking at the enterprise as a whole, even if you are talking about an organization with many branches spread across the country, even each of those branches could be made as a profit center. Many organizations do that. If one were to look at that, while each of the business units have to look at their profitability, the organization as a whole has to consider all of them together to arrive at it. That's where EPM plays a role. The system integrates and analyzes data from many sources. It's not only one source. It may be, in fact, we will be seeing later that it doesn't even take from one ERP. So many business units may be using many ERP systems. Outputs from various ERP systems also can be taken while taking the analysis. EPM is a software tool which is being given by many leading software developers, if one were to see, does this exercise. Basically it's for large organizations with multiple business units. Though you can use it for individual organization, one unit's performance also, but by and large, it is mostly used for organizations with multiple business units where collecting data and then putting them together is going to be an imperative for success. So the goal of EPM is to provide companies with significant business insights through processes like budgeting, scenario analysis, financial planning, forecasting, and data reporting. These are the four basic things what EPM does. Budgeting is strategy and strategy development, what the company is capable of doing. That EPM can help you decide that. You can scenario analysis is about risk management, about different scenarios, how your plans will work. EPM can help you to do that. Financial planning doesn't require any explanation. Forecasting and data reporting. Forecasting is absolutely essential for any planning exercise, because unless you have a forecast, what are you going to be aiming at? So all these things are being done by the EPM as a tool. SCM and supply chain management, risk management. Today, these are, as one can understand, today we always talk about supply chain efficiencies. Supply chain disruptions can create havoc in business. That's what happened in the last 2 years. You look at what happened during the pandemic. Automobile production came down. So many things came down. The prices went up in for some of the items, and they were always talking about supply chain disruptions. So supply chain efficiency and supply chain performance is absolutely going to be one of the main pillars on which organizational performance is going to be built on. So EPM is essential because of this. And if you look at how it has evolved, originally it was being done in the manual processes being followed, and profitability and performance are the foundational success. And just basically managed only by finance. Finance people were looking at it. They were using spreadsheets to track the progress and all of that. But EPM as a tool does integrate all this data, what you get, if you are going to use the software tool. If you are going to be, as I talked to you about, if you are looking at a smaller enterprise who cannot afford to have any tool, we can certainly take the concept of EPM, wherein collecting data on metrics on a continuous basis, on a periodic basis, utilizing them for comparing it with your plans, and then taking corrective actions. That's certainly that's how we can do for smaller industries. Now, typically, when you're doing manually, human errors are possible, but EPM as a tool, what's going to happen? It can help you. These are required. So stale and inaccurate data introduce additional challenges. So how you can do all of this? That's what the current tool of EPM does. See, they came to start use in the late last decade of the previous century. Originally, they were all set in the systems in the premises. Servers were there in the premises, which was used because the data that was collected used was less. But now that the data usage has gone up tremendously, the systems have moved to migrated to the cloud, and the cloud-based EPM can provide, and budget also, cloud-based EPM is also much, because it's going to be cloud-based, it's much cheaper for the organizations to use. And they provide additional efficiencies, importantly, across real-time operational. This is what is important. Real-time operational and financial data is available to you at all times. What is required, we will talk about a little later. But if these are available, you are going to be able to, in a position to track your performance vis-a-vis the plan that you had made. All the companies have to have a plan. I'm sure whether it's a large industry, medium industry, or a small industry, this has to be there. Without a plan, you're not going to be walking along a blind alley. You're going to have a plan. So on the basis of the plan, you're working. So are you going along the right path? For that, this performance tracking is absolutely essential. And EPM gives you all those data directly after collecting it from various sources. Typically, if you look at this, you want to realize, companies can realize a holistic integrated approach. You can bring all the plans in a seamless manner. Of multiple departments, plans can be brought together in a seamless manner. And whether the business units or the departments that you are talking about, they can manage their own plans, but they are not doing it independently of their own. The EPM is going to ensure that when you're integrating it in the system is going to tell you how one has to change one's plans in order to align itself with the organizational plan. That's the basic way in which EPM has grown over a period of time. This is, of course, one thing what we have about performance management. We always say this. How do you know whether you have arrived if you do not know where you are going or where you have been? You don't know. If you don't know where you are going and where you have been, then how will you know whether you have reached your goal or not, right? So it is necessary that you know where you are going, plan, and where you have been, what was the previous thing, and whether you have arrived, the objective has been reached. So this is especially very sure true. This is a statement which tells you that your performance tracking is absolutely essential for success. The framework, if one were to see broadly, if one were to see this framework, if you see, there is a phase, strategic phase, execution phase, and performance appraisal phase, evaluation, KPIs, key performance indicators. I'm sure most of you are aware of all these terminologies which are shown here. Basically, as you can see in the organization has to have a culture. A culture has to be developed. Any new technique or technology, if one is going to be introduced in the organization, a culture adopt the technology and go by the technological suggestions is essential. right? So culture, of course, the management, top management has to be fully involved in it, and it has to ensure that the entire people are going to be involved in the completion of the exercise. Of course, you have the data, the system, and the process, what has to be followed. They're going to be followed. So if you see that, so the stages which, this is the broad framework in which the EPM works. So if you're looking at the process, the strategizing phase, what you do is, see, even for preparing the plan, EPM can be used. For preparation of the plan, right from that stage, it is not just for monitoring. Please understand. EPM, even in the preparation of the plan stage, so plan is going to be prepared with all the risks identified, with all the environmental uncertainties that can happen. So there is a very clear in objectives. I have seen many organizations, if you were to ask some companies especially, what is their objective? I have asked people, some companies, whether your objective is to improve your top line or bottom line. I have had multiple answers. Some people say we want to be a 1,000 crore company or a 5,000 crore company in terms of maximizing one's turnover. Whereas somebody else is of the opinion that somebody else, the same company, have said that no, we would like to maximize profits. Now, there should be clarity in objectives, at least amongst the top management. If the clarity in objectives is not there, then your plan itself is not going to be focusing on one goal, right? Even if there are multiple goals, they cannot be in conflict with each other. So it's a clarity in objectives is absolutely essential. Then, of course, although these are all things what people have already heard many times. So I've just put them over there. SWOT analysis, the core competency assessment, risk assessment, and communication planning. This communication planning is a softer skill. How you are going to ensure that your human resources apprised of what you are trying to do and what is their part in it and how you are progressing. So these are all part of the strategizing phase. Whereas in the next phase, once the strategizing, these things are cleared, then when you have the look at the data that you have and the environment in which you are working, you will be able to decide where you want to go, what's going to be the plan of action for that year. If it's going to be done yearly, we will talk about the periodicity a little later. But typically, the plans of action for a 1 year, it could be a strategic plan. You may have to have a 2 years, 3 years, or 5 years. But typically, medium-term plans you do for a period of 9 months to 1 year. But 1 year plans and finalizing of all the budgets. See, what do you mean by budget? Budget is going to be your benchmark for comparison. Every department, budget is not necessarily only financial. Every department has to have a budget in terms of sales budget you have, in terms of production targets you have got, cost reduction targets, maybe even to the procurement department. We had a friend from the procurement section here. I'm sure that procurement people are all the time looking at cost reduction. How am I going to get reduce the cost without having an impact on the quality of inputs or the reliability of delivery? That's a big question what procurement managers always face, right? So all of them have to have a benchmark for comparison. So that is what EPM can do for you. Then, of course, once this is done, the plan is rolled out, the company is functioning, then the strategy is being executed. What is going to be done? The EPM, what it does is you have to identify the key performance indicators are to be identified, or the performance metrics, as I mentioned elsewhere, they have to be identified by the company by having you. There are multiple ways of raising these KPIs. I'm not going to be going into that, but what performance indicators are to be really key to the success of the organization in each of the department or each of the units has to be fully understood. And then these performance indicators or metrics have to be evaluated on a continuous basis. The EPM is going to help you do that. If you have a software tool, I'm talking about two things here. One is using the software tool. The other is, if you are not to have a software tool, you can take it into your culture. Define performance metrics, get data on that on a periodic basis, and try to see where you are as compared to where you should have been. And that is going to give you an idea about whether you're on the right path or you have to take some corrective steps. As I mentioned at the outset, I have seen that many companies which have had difficulties, which have faced difficulties at some point of time or the other in their businesses, including mine. I'm no exception. Our companies, whatever companies I ran, we had many times issues which could have probably been avoided had we been a little more, aware of what exactly was going wrong a little earlier. So rather than be rudely awakened by the complexity of this crisis situation, EPM is going to help you to take corrective actions at the right time. So I'm not going to be, if you look at the process, how exactly EPM works, you see, access data across all business units. See, how is it going to access? This is another question. See, as I was mentioning to you before, EPM is performance evaluation and performance monitoring and performance managing too, right? So it's going to collect data from whatever data here. You may have your ERPs. You may have all the business units may have different ERPs, or there may be one ERP with which the various departments or business units may be using. It's going to be collecting all the data from all of them. And of course, because EPM is now using cloud, you can leverage the agility of the cloud to access financial and operational data. You require both the data. Operational data, by that, what we mean? We talk about production, we talk about sales, we talk about the costs. Whereas we talk financial, we talk about revenue, we talk about expenses. All these data are collected from the organizations, from all departments, including IT, marketing, HR, operation. All kinds of information are collected from all the business units on a continuous basis. Just like ERP, I'm sure most of you are aware of ERP, wherein you make an entry in one place, it gets reflected in all the places where it is going to have an impact. Similarly, if you have an EPM tool with you, if you are connecting your EPM to the various ERPs, of course, EPM also for installation, you have to take the provider's help if you're going to use the software tool. And one thing is good about EPM is that, the complete installation can be done in 3 to 4 months' time, as against an ERP, which nowadays, like SAP, you're talking about a large organization, SAP or Oracle, take anywhere between 1 and 2 years for installation. Whereas the EPM is much faster because it's basically cloud-based. That's one of the biggest advantages of that. So the first step is typically it has access to all the data from different places. And then it can, with that, decision making is supposed to be done by you, but if we can put in some decision making algorithms also in the software, so more confident decisions, and we can respond to disruptions quickly. It automatically suggests you, hey, this is where we are going. The red flag is raised as and when we can program all of that in such a way that you are given the signals could be pretty early. The signals of if it's a warning signal, it could be pretty early. Of course, once you collect, as far as the plan is concerned, before you create the plan, you collect all the data. Using the data, you use a strategic plan, creating analytical tools are available, which you talked to about, creating scenario analysis, the what if analysis, we call it, sensitivity analysis, we call it, or you can call it risk management. That's basically, when you talk about scenario analysis, talking about various scenarios and getting prepared for it, you are talking about risk management indirectly. So data analytics, multiple tools are available. Using all of that, you have your strategy is developed using the EPM. Of course, accordingly, the moment the strategy is understood, it goes along to make the budget. After the budget, it starts, you start tracking real-time data as it starts tracking. Because you're not implementing, the company is running, right? Already the plan is in place, your EPM is in place, okay? So the moment the data about sales is being entered into your ERP or in your software, whichever you are using, that is being pulled away from there by this EPM system. Any of the data, whether it is sales or purchase procurement or production figures or financial figures or collections, everything gets collected by that, and it goes into the EPM tool. So real-time data is taken and the performance metric, whatever you have had before, will be checked by the system. And you are going to get whether adjustments are required or not, how exactly it has to be. And we can also develop different MIS reports. Reports could be, you can design reports which could be coming out of this EPM tool to the various tower executives at different levels, different kinds of reports may be required. That also could be done. That will help you to, take corrective actions immediately. Of course, at the end of the day, when your EPM also is going to tell you in what all places we went wrong and how did you, how was your performance during the year and how is the profitability against the actual original plan. It also can give you inputs about where all you could have probably done better and what are the new opportunities in the new environment that has evolved in the recent past could be exploited. That also it can help you. It can help you to take corrective actions. And all these things will help you to form a better planning for the next cycle. Yeah. See, benefits of an EPM system, I think when I talk to you about the things what an EPM tool can do, probably the benefits were automatic, dropouts from that. So some of the top benefits, profitability, absolutely, you're going to be right on target. You'll know whether whatever the planning you had done is going to be all right, or if the profitability were to take precedence, then what is to be done with your pricing if the market were to change, or if the demand were going to be changing and because of that your profitability is going to matter, how again the pricing has to be changed. All kinds of complex questions involving in different departments in the organization And please remember, when we talk multiple business units, the total company has a strategic objective of reaching, say, the total. For example, if you have to look at a company like, of course, some of these the enterprises have huge company of business units, which they don't integrate, they will do it separately. But typically companies with multiple branches, if you're going to consider branches as business units, all the branches profitability is going to be consolidated in the final organization. This can be a great experience, great tool, which can tell you about where you are doing well, where you are not doing well, and why you are not doing well, and how you can do better. So that's the beauty. The output can help you to do that. Because you are getting data from all the lines of business, what you are doing is, the strategy is an integrated business strategy, we call it, rather than having different strategies for different business units or different departments. When you have an integrated strategy, in integrated strategy, what happens is, we will ensure that the optimal strategy is taken, because there should not be conflict in strategies in multiple business units are performing. It could quite happen if one were to look at the local optima, not the, every unit is trying to maximize its own profits. If that were to happen, and when 3 or 4 or 5 or 6 business units coexist, there could be conflicts of interest. So, but if you're going to consolidate them together and then look at the organizational objective, we will say that the organization's profits have to go up. Such conflicts can be resolved. That's what integrated business strategy. It also identifies opportunities, and you'll be able to make appropriate decisions. That's what integrated business strategy is all about. That's another big benefit. Of course, it's an automated financial process, because just like ERP, where I, as an entrepreneur, I was mentioning, 30 years back, I have written books of accounts for my company 40 years back. When I started my initially we didn't have computers those days. I've written accounts myself personally. We knew how painful it was, but how easy it has become now. IT and automation has certainly helped you people to change their ways of working. So typically what people were doing was looking at performance metrics and trying to manage the performance. A lot of spreadsheet modeling had to be done, for which data has to be taken from the existing system, put into separate spreadsheets, and algorithms had to be put in so that performance could be monitored. But all of that is being automated now in the ZPMS software tool. Because of that, it connects processes and data from across the organization, so that a comprehensive review of the business can be done. No regulatory oversight. If you are going to be loading all the regulatory requirements into the EPM, you can ensure that you don't get into any trouble with any law enforcement agencies in terms of, it could be income tax, it could be GST, it could be labor laws, it could be anything. All those things also could be put in to the system, so that you will not be you'll be avoiding having you'll not be you ensure that there is no regulatory oversight, because as you are aware, regulations keep changing on a continuous basis, right? What is true, what is accepted today is not accepted tomorrow. So how are we going to be keeping track of it? So there has to be a team which is going to be feeding these informations into the system. Then the system will take care and warn you about regulatory changes and how you can ensure that you are working within the regulations. That's what EPM is going to advise you about. Of course, the subsequent step, next step, what is shown here, faster reconciliation of accounts. The ERP, the software themselves do it. But here we are talking about, when you're talking about financial closure, when we talk about financial closure, more often than not, when you look at companies, this is for companies with multiple business units. When multiple business units are there, to consolidate all the financial accounts and then finalize the accounts and then release the balance sheet, it does take time even now. Individual companies can come out with their balance sheets, that maybe within a short period of time. But if you're going to have a company with multiple business units having different types of activities and having different types of balance sheets and PL and accounts, to consolidate them and then bring them into one and closing the accounts is a challenge for most of the CFOs. So this helps you to, because you're already been consolidating all the time, you've been doing that, it helps you to eliminate delays in that. Even global reconciliation could be global. It's not necessarily here. As I was mentioning before, one of the advantages of EPM as a tool is you are not going to be, you can be programmed to access information from many ERPs. If you have got many ERP systems running across the different units, from everything, data can be taken real time. So there is not going to be any delay in the consolidation. That's the biggest advantage in using an EPM tool. Of course, as far as retailers are concerned, it says calculate and simulate profitability shown on the down to the transaction level, right from the POS, point of sales data we call it, right from the lowest level up to the higher levels, and identifying new opportunities for retailers improving their profitability. When you have multiple retail showrooms across different places, where the retail offices, you have one office where you got 50 retail showrooms, and you want to maximize your profitability, and you want to save on your inventory because you've got multiple places. On all those metrics, EPM can be of some help to you and ensure that you improve your performance. Manufacturers, if you were to see, it talks about cost and profitability analytics. There are many analytical tools which can help you to reduce your costs and improve your profitability. And then talk about your talk about your just a second, please. Yeah, whether make or buy decisions, such all those fundamental, very simple decisions. What we typically do in our day-to-day operations also could be you could be helped. You could take help from EPM, which because it's working on real-time data, and you can ensure that your profitability is not affected by the vagaries of the environment that's changing on a continuous basis. See, once we see as the EP, now we have seen, we are all the time been talking about performance metrics, measure them. That's what is going to be used by the metrics are the ones that are going to be used by the EPM to find your thing. So this is a statement which is given by Peter Drucker. No, few factors are as important to the performance of an organization as measurement. And measurement is among the weakest areas in management today. This is what Peter Drucker said. He had done, of course, he said a long time back, but I think it is still true today. I would like to ask if there are entrepreneurs there sitting in the system, among the participants. I can tell you, I was one of the culprits. That's why I'm. Let me admit it now. As an entrepreneur, I was so much more engrossed in doing. Of course, I stopped being an entrepreneur about 13 years back. That's quite a long time. But nevertheless, this kind of a continuous monitoring, persistent monitoring, if I were to do, and if I were to know what I was going to measure, and if I had developed some schemes of measuring these things on a regular basis, I think I would have been a lot better off than what I actually am. So Drucker has said that, and measurement is the weakest area. I want each one of you to think about your own organization and see whether you have got the metrics written down. What are the performance metrics that you have to measure to assess your performance, and how often you are looking at them, how often you are collecting them, how often you are comparing them with what they should be. I'm sure the answer from many of you is going to be there can be a lot more improvement than what we have been doing. That's what your answer would be. That's what Drucker has said. And it's not, it's for everybody, So what are the performance metrics? This is, of course, they're taken from somewhere. Typically, performance metrics of many types. There are thousands of performance metrics one can do. What metric is going to be useful to you is something what a company has to decide by itself. But broadly, what you can see is we can talk about various functional areas. Metrics could be decided for that. Broadly, you can say business performance metrics. If you talk about total performance of the business, the ROI, all of us know, return on investment could be one performance metric. Profitability, productivity, they are all business performance metrics. You have project management metrics, scope of work, quality and satisfaction cost. These are all only indicative. This is not exhaustive. And maybe for your company, some of these metrics will not be of any use. So I don't want anyone to think that there is something, there is nothing, no great sanctity attached to any of these metrics. One has to understand what is required for one's organization and accordingly decide the performance metrics as far as metrics are concerned. Of course, employee performance metrics are there, sales performance metrics are there. Typically, what I would say is for a manufacturing organization or a service organization, typically at the ground level, what are the things that I will be measuring to know where I am is what I have given in these slides. The operational metrics about the operational efficiency, workload or output measures, output of the organization. What is the output? Whatever be your company, whatever you're doing, it's a product, service, right? What is the production levels? What's the productivity? I hope all of us, productivity is about what? Productivity is about the efficiency of production, right? Production is quantity, whereas productivity is the rate at which you, how well you have been able to utilize productivity. Then efficiency measures, effectiveness or outcome measures. Efficiency measures is what? About wastages. You can have metrics about wastage. I'm telling you, I have seen, one of the biggest problems what we face as an entrepreneur is when all my costing was good, everything was good. At the end of the day, I found that my consumption was going up. My consumption went up. I saw this subsequently. The material was always there. We were running the production, but I was not comfortable with my profitability or the cash flow that I was having When we went back into and checked it, we realized that my yield was less. When the yield was less, efficiency was poor. Why the efficiency is poor? When we saw, we realized that it was because of some input material problem. Input material was giving just for you to understand, if you are supposed to give me a 0.12 mm thick sheet, if you give me 0.123 mm thickness sheet, if I'm going to use that, I'm going to be wasting my material. I'm not getting money. I'm not being paid for the 0.003 mm material sheet if I'm using, right? We used to use paper in our factory, so we used to call the unit was GSM, grams per square meter. So 1 square meter, how much it weighs, that's the way it used to measure the thickness of the paper. Now GSM, when we talked about, if you order 120 GSM and the GSM, average GSM is 130, 6% your input cost goes up automatically. Now, if you do not know these wastages, these things have to be monitored on a consistency basis. So operational metrics, these are all the metrics what one has to understand. Cost of goods sold, this will get affected if your yield is going to be poor. Consumption of input, this is what I was talking about. On-time delivery, this is a very important question because this is going to, again, ensure about your customer satisfaction, which is the ultimate goal. Full quantity delivery. This is also one more metric which we generally use, because very often what we do is, suppose the requirement of 100 tons is there and you supply 75 tons in time, and the 25 tons is going to be delayed. And if it's going to be a continuous exercise for a period of time, you're going to be in trouble with the customer. So it's not that delivery has it been delivered? They will say yes, but how much? That's an important question. That's why this also becomes an important metric. So these are all metrics. Once again, I have given from my experience. Okay, I have not taken from any book. I have taken from my experience what all could be probably the metrics which would be. I thought these are the metrics which would have been useful for me in my manufacturing organization. So I'm sure that any of you, depending on the field that you are in, you'll be able to develop your own metrics. What has to be measured and what has to be, what can be used to assess your performance, and how you can manage that metric, how you can ensure that you get better results next time. Look at the marketing. You can talk about revenue growth. I think it's obvious. You're increasing your market share, or the market share you're increasing. That's what it talks about. Revenue per client. This is very crucial because, again, you know what? There are multiple theories about what kind of a customer base you want to have. Whether you want to have 2 customers with 100 crores each requirement or 20 customers with 10 crores requirement. There are pluses and minuses for both. So I think both these things are very important points which one has to understand. And these also will be important metrics. All of them are going to have budget. When you're going to use EPM, what's going to happen is the budgets, all of them will be clearly specified. Hey, this is where I am. This is where I want to be in the current year. Of every department, that roles will be clearly spelled out. In marketing, how many customers do we have? Do you want to increase the customer base? How much? What should be the average client revenue? Because you know what? If you're going to be doing a turnover of 100 crores per month, you don't want customers with 5 lakhs and 10 lakhs, right? It's going to be difficult to manage them. Because believe me, a customer that it takes 5 lakhs from you or 5 crores from you, he expects the same amount of service from you. You cannot say that you are a 5 lakh customer. It's just not going to be possible. I have seen that. We could never do that. So I think these factors, what we are talking about, revenue growth, revenue per client is again a very crucial metric. Client retention and expansion. Expansion is about increasing the number of clients. Retention is how often do we change the customers. I'm sure, in fact, I used to tell that client retention, or even in fact, I would talk about operationally also, suppliers retention also is an important point today. Today, we are talking about supply chain management is such an important aspect of business performance. Suppliers, if they are going to be changing on a regular basis, your institution can never be stable. So today, whatever you're talking about client retention, the same importance has to be given for suppliers retention also. How will you retain the suppliers? You're going to keep them happy in terms of the quantity that you give and the price that you give, right? You cannot take them for granted. So client retention, expansion, client satisfaction by that, your full quantity delivery, what you saw here, that and the on-time delivery and full quantity delivery will ensure this client satisfaction. So these are some of them metrics are related, but if you create these metrics, put some numbers, give the numbers there to the system, and then measure these numbers on a period level, the typical times of periodicity, you will be in a position to understand how your marketing function has been performing, or how your operational function has been performing area. Similarly, when you look at the people-related metrics, that's very crucial. See, as you're aware, about 30, 40 years back, when I did my MBA, for example, I had a management, we had only personnel management, right? They were looked at, the workforce was thought of as personnel. The workforce was not, what are they thought of today? Today, they are thought of as human resource. They have become strategic partners in your business, right? So people-related metrics are also very crucial for organized enterprise performance. So employee retention, employee satisfaction, these are all probably how you are going to measure them. You have to decide by yourself. Your retention could be probably an easier way of measuring. There has to be data collection methods should be there. So whenever we talk about any tool to be used for which data has to be fed, there has to be set procedures by which these data points are going to be collected. So that's what will employee satisfaction. Financial performance, I think most of us end up doing this. Many of us in the industry, at least the entrepreneurial side, they are very bothered about this. And the previous thing they are some probably not that aware of, or they don't give the requisite attention. One has to understand that you have to pay equal attention to all the functions of your business. It's not that finance is not going to be great if you're going to be failing in all the other functions. Hence, the financial performance is absolutely dependent on the performance of the other functions too. So if you look at financial performance metrics, you have profitability measures, cash flow, liquidity measures, etc. Then you have supply chain metrics. Supply chain metrics are also going to be, it's part of operational metrics actually, but you can look at the micro metrics. What I have mentioned something which could be of help to you. You see inventory turnover ratio, cash to inventory turnover ratio is going to tell you how well you've been able to control your inventory, how much you have been able to turn the inventory over to get your sales figures. So obviously, higher sales to a lower inventory is going to be better for you, right? The 1 crore inventory, if you're able to convert, do a turnover of 12 crores, then your inventory turnover is inventory to sales is going to be 1 by 12. Whereas if you're able to do only 6 crores, it's going to be a higher number, right? So that's what inventory turnovers is all about. Then you have cash to cash cycle, talks about the entire liquidity problem, your cash flow problem, how you are able to manage your supplier, how you are able to manage your customer. All of them will be, will together have an impact on this cash to cash cycle. And all these are very much measurable. All these are very much measurable. Receivables and payables measures, supplier continuance, of course, I've written supplier continuance here, I've written what I talked to you about earlier. Now, what we're trying to say here is we're trying to identify metrics. As one can understand, these metrics, even an individual organization can use for its performance management, whether they're using the EPM tool or not. These metrics, this methodology, what EPM tool is following, if we were to follow, albeit not in completely automated fashion as an EPM does, the smaller we are, we don't require that much of automation, but you have to have a dedicated cell doing that. If you do that, you're managing your performance is going to be certainly absolutely satisfactory. As you can see here, the commitment of the top management is essential. Very often we believe, I have seen this happen, we do not want to accept that we are not doing well, especially in the small scale industry, even organizations. They are under the illusion that things are for temporary, it will be all right. Nothing is going to become all right by itself, let me tell you. If we are not doing well at some point of time, it's due to reasons that we are not handling some of our functions properly. So we have to be prepared to take the bitter pill and accept that, yes, there is a problem. That is the biggest drawback why performance assessment is not done at all levels. People would rather turn a blind eye than look at it and take corrective steps. That's the biggest problem what one enterprise can have. That's why we say that the top management has to have full commitment. Just because you are answerable to the board does not mean that you are not going to be assessing yourself properly, right? Corporate governance will take care of that never anyway. But in order to bring in anything, any new measures into the company, this commitment of the top management is absolutely essential. Of course, they have to support you with the infrastructure and the technology. There's no saying that. These are some of the best practices what people can do. If you are to, these are being done by companies which are having good performance measurement management systems. Of course, and I also honestly believe that though EPM is a tool which does all the work by itself, still it will be great if you can have a performance management team in the organization, which is going to do this exercise, take this exercise dedicated only for this to continuously monitor the performances, and then whatever EPM is to a tool is suggesting or your team is suggesting, you will be in a position to take it forward to the operational level, take it to the board, take it to your top management and tell them where we are going wrong and how we can correct it. For that, you have to necessarily have a dedicated team of employees. These are all my thoughts on the subject, because I believe that at the end of the day, if top management support is not there and if you don't have a dedicated team for anything, because all of you are always busy with your assigned work, and this is going to be an additional task, this is going to get only secondary preference. In order to avoid that, it's better to create an independent, just like an internal audit team. Most of the companies do have internal auditors, right? So similarly, if you have an audit, this is not like an audit team, it's more like an assessment team and an advising team. If it could be created, it will certainly help. It will be one of the better practices. Of course, this is a statement. What we have talked about here is what we discussed earlier. Organizations should not be fractured by independent actions of various business units. This is very crucial. Local optimize should not do. There should not be conflicting interests. There have to be, all the units have to be aligned and pursue a single goal. This is very crucial. Of course, developing a culture of good performance is absolutely essential, for which you have to get your entire team on board, entire human resource on board. People should be told that you want to perform well. For that, everybody is contributing. That has to go to the minds of all even the smallest person in the organization. He has to do his work well, right? How are you going to say that? Unless you carry this, their culture has to be created. Japan, they talk about quality itself as a culture. They cannot believe that a poor quality product can be made. That's why the quality, when you talk about quality, it turned from quality control to quality assurance. The terminology changed. What is quality control? Quality control is post facto. After it has happened, you're controlling the quality, inspecting, and then sending it for rework, correcting it, and giving. Quality assurance is going to completely remove this. It's going to be, you're going to assure quality. The process is going to be managed in such a way that you're going to assure quality. So that's what is going to be absolutely essential for any organization. And if you're going to take all your employees on board, then you're going to have the full commitment from them. Unless the entire organization is fully committed towards improving its performance, my sincere opinion is, whatever tool you may use, whatever systems you may use, whichever consultant you may bring into your organization to give you advice, it's not going to work. So the entire organization has to necessarily work together. The last slide, what I will be talking about, I think I'm well in time. Analytics is, what today, with the advent of so much of data is available to us now, right? With the advent of internet, the amount of data that's available is mind-boggling. You don't know what to do with the data, typically. That's why data analysis and data science has become such a crucial, skill in the current day world. There is always a demand for good data scientists. The reason being, there are not too many available with the necessary skills. So analytics is going to be the one which is at the base of the EPM, basically. If you look at it, IBM, SAP, Oracle, Post Analytics, they're all giving EPM software. In all of them, if you see, the analytics is going to be an integral part of them, right? Even if individuals or some smaller companies who are not buying the EPM tool, you get your information from your ERP or your software, whatever you have. All of you may know, now of course, ERPs are available, smaller sizes, small industries, medium industries, at different budgets, you can get ERPs. They can give you the information what you want. ERPs cannot give you corrective steps all the time. No, not possible. But ERPs can give you information what you want. If the information is available with you, if you know what models to use when. For example, typically, I would say that I have used these models despite the fact that I passed out of my MBA course in 79 and I started my company in 81. I was running them till 2008. At least towards the later portion of my business, my entrepreneurship, I started using these models. And believe me, I honestly believe that if you are going to use these models, you are going to be much better off than otherwise. Forecasting models, plenty of forecasting models are there. Now, which model is going to be apt for you is something what you will have to decide after looking at those models. Or employ an analyst who understands data science and who you tell him what you want. You tell him what kind of a performance metrics you have, and what kind of decisions you want to take. He'll be in a position to tell you what kind of models you have to use. Typically, we use forecasting models, optimization models, and simulation models. Simulation models is going to help you to check different scenarios, how your plan will work. Because future is always uncertain. If future is going to change, and a different scenario, will your plan work? That one has to understand. So for that, you will have simulation can be an important tool. I think it's imperative that analytics is part of your decision-making process. Then what happens is your decision-making is not purely qualitative. Qualitative decision-making is purely based on intuition, experience, expertise, whereas quantitative analysis gives you some objective basis on which. See, we can never write off qualitative analysis or qualitative decision-making, but that can be you can put your qualitative analysis and analytical skills, you can superimpose them over the base that has been given to you by the quantitative skills. For that, analytics is absolutely essential. But as far as if companies which are using EPM software, if they are going to be using, given by any of these, there are multiple companies which are doing EPM softwares. All these functions are all inbuilt, and that's how they are able to, the EPM software itself can give you suggestions, can give you how to strategic planning, everything it can give you, right? And it can really help you to succeed in your challenging environment, right? So well, I would like to close this session by saying that, see, as I mentioned to you at the outset, this is not a session where you can know what exactly EPM. In fact, it would be great if HMA could follow it up with maybe trying to get one of these larger organizations, check out with them who is using an EPM tool. They're able to demonstrate the usage of UPM tool. It will probably you'll be able to appreciate whatever I have told you in this session. But this session's objective was to understand how important it is to have an integrated view of how important it is to, first of all, measure performance, and how to measure performance using what kind of metrics. And having measured the performance, how can you manage them? Your analytical tools, for analysis, use the analytical tools, mathematical tools, and superimpose your qualitative skills on that. How you will be able to come to comprehensive decision making, which will be better for your organization. So I would believe that enterprise performance management is a culture and is essential for all organizations, big or small, and all the organizations to embrace this culture is absolutely essential for a successful organization. I will stop my session here. I could have, the session being what it is and not knowing, the spectrum of the participants, I could not be more specific. It was more generic in nature, and I hope it's given some idea about what exactly the EPM tool does, what does it do, and how exactly even the small and medium scale and single unit organizations, for them, how performance measurement and management is essential for success. I hope some idea has been given in that. Thank you.
So that was a wonderful session, sir. Absolutely. I think we have approached the entire topic in a very compact and very, sort of a power-packed type of discussion that you put across. I think it is given really an overview fundamentally. Maybe Rajan Prasad Garu can take some questions that are there on
yes,
the
sir, yes, sir. Yes, sir. Yes, sir. Yeah.
I think I am well in time, right? I was looking at the time. All the you can talk for a couple of
I
hours.
think you're on the dot time, sir. Exactly. Yeah.
Absolutely.
Sir, I think there is one question from KN Subani to everyone, that simulation is dangerous tool for right people. He's saying that simulation
is can I have the question again?
Tool. Simulation is dangerous tool for right people.
Simulation is dangerous. I don't understand that unless
Okay, sir.
I don't understand what he's saying. Why should simulation is to avoid dangers? You are doing simulation. If
you're right. Absolutely.
Real-time environment, you'll be losing. Whereas if you're going to simulate the environment and see how you are performing, you are getting prepared for facing that, right? So I don't. Unless we hear from him directly, I will not be able to say that.
Yes, sir. Yeah, there is an impeccable session and very informative session from Ahmad. And sir, our President Ramchandra Garu asking, sir, like an excellent session. Thank you, sir. First one is, does organization culture needs to be aligned to this? And how ESG requirements get aligned with EPM. ESG requirements get aligned with EPM. Second one is, which are the important areas MSME can use these techniques when mostly the promoters are not so well equipped? Is there any low-cost software for this? Two questions, sir.
See, the first question, can I have the first question, please? I'm a little older,
ESG requirement. Does organization
first question.
Hello?
Yeah.
Does organization culture needs to be aligned to this? And how ESG requirement
I think we talked about it at the end. Towards the end of the session, I talked about it, See, nothing is going to work if the organization culture is not created. You remember that towards the end of the session, I was talking about the need to educate your, your employees, the entire workforce towards the new culture has to necessarily come in. And as far as sustainability is concerned, see, that is also going to be one performance metric. You're talking about sustainability goals, then that also can be one performance metric. That's what I mentioned. Performance metric, I said, there was nothing sacrosanct about the number of metrics that I have seen. In your wish, the top management feels that these are all the metrics which are going to have an impact on my performance as per our opinion. We can bring that into metric. The only thing what you have to be sure about is how are you going to measure it, right? What are the ways in which you are going to measure it? So any performance requirement can be managed only if it is measured. So giving a metric for that is going to be absolutely essential for you to manage it. That's what I would say. Culture is essential. It's certainly you cannot overnight go into that. As far as small scale industry is concerned, as I was mentioning to you all the time, there was, as I was mentioning, when I started my business, I was writing books of accounts, but I have written books of accounts myself, I told you. But then I started Wings first, then I started using Tally software. Today, I think most of the people are using, at least for accounts portion of it, most of them are using packages what are available, right? And but today ERPs are available even at all these companies. I have not used it in my company, so I can't give you the numbers, and I'm out of business since last 13 years. So I will not be able to give the contemporary situation. But the fact is that many companies have called me and said, hey, we can design an ERP for you, which will not be expensive, which will be cheaper. They have said, I'm sure the current businessmen will be aware of that. They can have ERPs. Information could be taken from ERPs to create the performance metrics they have to create. Individual organizations have to create the performance metrics. What performance metrics would they like to follow on a regular basis, and how they would like to manage it? So the analysis portion and the corrective steps portion, one has to do it by oneself, because the EPM is not there to give you the suggestion. But the metric, once it comes from your ERP or your software or your data, whichever mode by which you collect your data, I'm sure you'll be in a position to use it to the extent. As I mentioned, I'm talking about a performance management as a requirement, basic requirement. EPM is a high tool. That's for the large organization corporations. But small companies, are we measuring our performance, and are we trying to monitor our performance and take corrective steps? That's the question what one has to ask. That's what I wanted to bring out in this session.
Yeah, fine, sir. Yeah. So I think there is another question from our HMA, that please name any companies in Hyderabad which have implemented this EPM and benefited.
I tried to get to know this, but unfortunately, I have no clue.
Okay.
I can get to know, but I have no idea. I tried to. People are not coming forward openly. India still, but for large organizations like, for example, if you take Tata's, I'm sure Tata will, because Tata has many business units, multiple places. They will be having EPM. I hope so, because but each of the unit is so large that each one of them can afford one unit, one system, and more than based. I really don't have any idea about organizations. But one thing I was mentioning a little earlier, Mr. Prasad, that if you can check up. In fact, a follow-up session for this would be, if somebody is using EPM in his company, he can do a demonstration of that, how it is being used in this company, how they have improved. That will really cement the understanding that this session was trying to impart.
Yes, sir. Yeah. Okay. Yeah.
So yesterday, 2 days back,
sir, one last question.
We had a session from Prasad.
Hello.
There was one session from Reddy Labs, Saumil Chakrabarti, who was the head of the finance. He was talking about strategic research allocation using financial models, and then the balanced scorecard method also was probably told.
There are tools available for you.
That's what he told, but probably they have their own internally designed thing.
No. I did not go into the tools that you can use. For example, if I'm going to talk about techniques and individual tools, it will not be a 1 hour session. It will be a few days session we have to give, because a lot of techniques and tools are being used by many organizations, like balanced scorecard or the resource allocation models. So many softwares are available for all of them. You can, but if you have an ERP, most of them are available as subunits. You'll be able to take it from ERP. If you have an SAP, you have forecasting modules, you have supply chain modules. You can take it. You can have an IMM module or a supply chain module. You can have SRM separately. You can have CRM. There is no end. These companies are so huge, and they have so many things. They have to customize the software to your requirement. That's why they take so much time to install. All of them available, plenty. My idea was not to go into those details at all. I told you these are to be measured. How to measure them? Available. How to assess the performance? You have got available. Performance metrics. EPM, if you see any software, how does it how does it give the solution? Whatever you're talking about is all working at the back end. The optimization techniques, what we teach for MBA students, or the statistical analysis techniques, what we teach for MBA students, they are the ones which are working at the back end. You have huge, all these things are all at the back end, and that's what runs this data through that, and the solution comes out.
Sir, one final question, sir. Muhammad Jaki Habib is saying, thanks to HMA and the presenter for the excellent effective session. The second one is simulation is a need of our businesses for effective management and future purpose. Is true. I think he's given correct this thing. As long as all the concerned are not on the same page, it's difficult for sustain growth and profitability of the organization.
Absolutely.
Yeah.
Now, if they are not on the same page, that's what I told you. You have to take people on the same page and conflicting objectives. See, that's the biggest issue. See, multiple units. Everybody would like to. I don't know about the current days. When I was working in HAL initially, in the first years of HAL, I remember. Now that I'm out for about 40 years, I can talk about it freely. I was aghast when I heard the different departments blaming the other department for jobs not getting done. The idea of people were not questioning why the job is not done. How we can do it? More than that, it was the important thing was it was not because of me, because of X, Y, Z. That's the way the situation was. I think if the organization is going to consider itself as one, so these conflicts should be necessarily avoided. That's why EPM, for large organizations with terabytes of data coming in for individuals to manage, is going to be not possible. EPM will certainly help in getting that together and then giving you optimal solutions.
Sir, I think we can request Gopalakrishna Garu also to talk a few words, sir. Sir is present.
Sir, he was sir, it will be.
Sir can add a few words, sir. Gopalakrishna Garu, sir. Sir, you're on mute.
Hello. Yeah.
Sir, Gopalakrishna, you're on mute, sir. Yes.
Now it's okay?
Yes, sir.
Yeah.
Yeah, we can.
First of all, let me congratulate Mr. Satish Kumar for a good presentation. And he has tried to actually, in a short span of about 45 minutes, try to deal with a very difficult topic. But from my point of view, what I would like actually is that what is the role of inter-firm comparison when we are talking of performance management of any institution? Second, we have to look at it as what needs to be done in the organization. Who has to do it? And how does he do it? This is one thing, and when has he to do it? These are very critical, small questions that needs to be asked. Second is that monitoring of the measurement, and that is okay, but productivity increase must be the main aim, and removal of all constraints to increase the productivity. And the other very good point he has made is particularly the culture that has to be developed where people feel we can do it. And also at the same time that the critical success factors are understood by everyone in the organization. And the key performance indices also are understood by everyone. So that is where the culture plays a very important role, that we can do it collectively better than what the other persons are doing or other organizations. So that point, I think in the next lecture, if you could actually cover these points, it will be very, very useful.
Thank you, sir.
Okay. Thank you, sir. Sir, your first point, what you mentioned about the inter-firm, who will do it? I told you that.
You see, because actually, I would say since I have been a MD of many organizations, the first question is, what are the constraints to higher productivity? And it is productivity between two companies that you actually, because we don't compete on the quantum of production, but on the growth of productivity. How do we improve productivity must be one of the main considerations. Also, at the same time, we must know how he is doing it, because you may have to handhold him to improve his skill. That is also very important. Also, at the same time, everyone in the organization must know what the goal is and how does he compare with someone else in the same field.
Absolutely.
So he must show, if they can do it, why can't we do it? So that type of a feeling is extremely important. And also at the same time, monitoring, measurement, motivation. All these three things are extremely important in my opinion. And all these things are actually the fallout of the culture that you develop in an organization, that we can excel other people. So that is the point that we should actually do.
Absolutely, sir. I fully agree with you. No, I fully agree with you on those points.
Sir, I would like to share
As I mentioned,
one
who
point.
will...
I would like to share one point, sir. Sir, during my experience with Sriram with Honda, so Japanese people are insisted to implement the quality circles. Like that is, they called a quality circle group. That we implemented in the shop floor, we implemented in the purchase, we implemented in the sale, we implemented in R&D. Like a group of people who pick up from each area. We highlight the problem. One is waste management. The third one is rejection control, customer satisfaction. All the issues, we took it up and made a quality circle and a group and the leader for that. And he monitors with all the people and gets the data. And finally, at the end of the month, there's a productive measurement was there. How many rejections they controlled it, what are the steps that they took it, how the housekeeping they did it and all. Probably in the future, I think I'll be taking up one session on lean manufacturing practices for our MSMEs. So that covers, there are various tools are there which control the shop floor operations, wastage and productivity improvisation.
You're absolutely correct. See that whatever your quality circles, there are not only quality circles, there are so many measures that the Japanese have. The Japanese, I would say, are the best practices of the modern operations, production management, if you had to say. They're the guys who took away the quality gurus from US to Japan, and they excelled, beat the US hollow, in their, because they're productive, as so Gopalakrishnan was mentioning, reduction of wastage, new concept they only brought in, right? And there are umpteen number of ways by which we can do all of that. We have not, in our session, we didn't touch upon those things. Sir.
Yeah.
Identified areas of concern. Sir, one answer to Mr. Gopalakrishnan would be, sir, as far as productivity, where is the problem? That will come in the analysis, sir. Because what are the causes for productivity to reduce? That would have been identified. Why it is good, why it is not good, why it is low. If those points are mentioned, that your system automatically, your function will come out. This is the reason. It may not be black and white. There can be some gray areas. You are perfectly, absolutely correct in that. We will have some idea about what one will have to do to improve productivity. I think there will be, in many of the cases, we will be able to find ways and means of doing it, unless there are some extraneous factors which are not allowing you to do that.
Yes.
My reaction would be, if you do an inter-firm comparison, we can actually find out how they have been able to do it and what were the constraints they faced and how did they remove those constraints. That is a very important consideration that we have to keep in mind. Also, at the same time, you have to see, for example, the Japanese, if in case you have to do it in 10 steps, can we do it in 2 steps, 3 steps?
Yes.
So this type of a thing comes from the analysis. But what is important is it acceptable by the people and are they willing to do it? For that, you see, you must actually put the competitive spirit in them. The competitive spirit must be, if that company is able to do it, why are we not able to do it? You see, you have to bring that thing as an element of the
boils
culture.
Down to the culture, sir. Finally, it boils down to the culture and the motivation. That's why we said people said today, all the organizations have to be necessarily people-centric, because whatever technology you might bring in, whatever consultants might give you advice, at the end of the day, if your team is not going to be with you, then you are never going to achieve it. I think that's the bottom line of whatever you are saying. I fully agree with you on that.
Because ultimately, it is the human factor that actually has to be there. Otherwise, whatever we may say, it won't help.
Very true.
Prasad, I think there are no more questions.
Yes, sir. Sir, I think you can give it the closing remarks and what of things, sir.
Well, thanks once again.
Thank HMA for this opportunity. Before Ramchandra Garu gives his closing remarks, I am very extremely pleased. You know what? I have not talked about. I have been mostly a number man in my institute. I play with numbers and then I contact with of course, performance measurement is something. I have done a lot of performance audits across the country for different places. So, but we understand the difficulty. But it's wonderful that it gave me an opportunity. I had to read a lot to give this thing. That way, you have been instrumental in me learning something.
We are also really.
Thank you very much. I thank the HMA and all the people, Prasad, for continuously talking to me, helping me, and providing me this opportunity. And I certainly would wish to become a member and take further part in HMA activities. Thank you very much.
You're most welcome, sir. You're really welcome to our HMA fraternity, sir. Thank you. Thank you very much.
Thanks. Sir, thank you very much. I think it was such a very absorbing session. As sir rightly Gopalakrishna rightly said, it was a dry subject, which, people have to get into it to understand how the exactly things go about one after the other. And I think I've also gone through the book and all that. I was going through all the different things available in this particular topic. And I did not find out anything you left there. Absolutely, you went through one by one, absolutely explaining the absolutely every aspect of the particular component that are in the performance management book. Everything is there. It's been spelled out, and you have brought your personal experience as being an entrepreneur also. I think it was really a fantastic session. And sir, we are really scouting for speakers like you, and it will benefit the entire management fraternity at large by listening to talk from people like you, sir. And we always have Gopalakrishna Garu, who always talks with just extempore. He talks things just on management, which are we're very grateful to you, sir. We also have another dignitary, Sai Kumar Garu of IPE.
Sai Kumar is there. My guru.
He is also one of our well-wisher. And there have been several other members who have been went through the entire program, because you made the program so absorbing. So thank you very much once again on behalf of HMA. As I always keep saying, that thanking is a very pleasant job, especially when the program ends like this. So thank you very much.
Thank
you.
All
the August audience, and please do keep attending our program. There will be really programs of real stuff. Absolutely, at the end of the day, you'll feel happy about it. Thank you, sir. Thank you. Welcome to all. Once again to this program.
Small announcement, sir. Small announcement. Next Friday, sir, 23rd, they had another interesting session, sir. That is about legal aspects of the MSMEs, sir. It's about evening 6 at the same time. You can all join, sir. You are most welcome. We'll share the registration link.
Thank you.
Yeah. Thank you, sir. Thank you.
Thank you. Thank you.
And namaste. Sir, namaste, question.
Yeah. Thank you, sir.
Karthik? 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 I think he is not there.